Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
Hello, everyone. Thank you for joining us on another podcast episode. Today's guest is Heather Posner, Vice President of National Product Manager Private Client. Is that right?
That's
Heather,
right.
did I?
That's right.
Okay,
You got
awesome. Congratulations. Look, I think, and this is with Burns and Wilcox, by the way, right? Let's just not forget to mention that. But I've known you now for less than a year, right? But and I think we've kind of like been seeing each other on LinkedIn. I finally got to meet you here a few months back. And I went to one of your classes that you gave. Number one, I saw you on a webinar with Bill Gatewood, Burns and Wilcox. And when I heard you speak, I'm like, boom, this gal, she knows her stuff. And so I wanted to get you on, and you know, you've been playing hard to get, but finally, thank you for allowing me to.
Sorry, it's a busy time right now.
No, I love it. I'm just teasing. Heather, let me just unpack some of your history, some of your experience, so people kind of get a sense of why they should listen in. So you started off with what insurance company, and how long ago with this first carrier?
So I started insurance in 1999.
Okay.
And that was with Progressive Insurance. That's where I got, basic training.
Okay. So you met Flo.
I sometimes say I have a little bit of responsibility for Flo, because there was something else that I was asked. They were doing some marketing. They were like, "What do you think of this?" And I said, "Oh, I think that's horrible." And then the next thing you know, they had Flo. So I'm like, take some credit. I'm sure it's not due.
That's so good. That's so good. I love it. Okay, so you were at Progressive, and were you doing auto? What were you doing?
I was doing auto, but I was always focused on, for the most part, brokers that deal with private client individuals, right? So they would every once in a while, a private client broker, so a broker that deals with a high net worth individual, would need Progressive as a solution as part of their package. So I was always sort of managing those broker relationships. Mm-hmm.
Wow, even from that long ago, huh?
Yeah.
That's awesome, because I speak to quite a bit of brokers that have experience in private client, but not I don't think this many years. Like this is good. This is really good. Okay, awesome. And so from Progressive, you went to
AIG
okay.
Private Client. Mm-hmm.
And what were you doing there?
Yeah, that was great. I was a sales manager there, and in the Midwest, which I have returned to the Midwest. I'm now in Cleveland, but I was a sales manager there, again, managing those broker relationships, helping them put together packages and put together insurance programs for their clients, making sure that they were well protected. And then I moved out to LA. So I was out in LA for 8 years with AIG, and then also Pure Insurance, who launched in California at that time, and did high value homes and packages, jewelry collections, and so forth. So it's really been my whole career before Burns and Wilcox, and then
that's awesome,
doing private client here.
Now, Heather, were you with Pure when they first launched?
California, yes.
Yeah, I remember that time, man. That was really exciting for Pure to take on a position like that, where I know the focus was to almost exclusively serve the high net worth clientele. Right?
Yep. Yeah. There were a lot of markets that was the focus. AIG Private Client, that was the focus. Chubb has been around forever. That's been their focus. So lots of markets that specifically are there for that private client individual. But, the market capabilities have changed. And so that's where what we do here at Burns and Wilcox has allowed me to continue to work with this broker segment that needs solutions for private client individuals.
Wow. And it's funny you say that. I just posted an article on LinkedIn today, and after I read it, I'm like, wow, like these high net worth clients have been sought after for many years.
Yes.
And so they're accustomed to like, hey, I have my pickings on what carrier I'm going to want to give my business to. And it's quite the opposite right now.
It is. Yeah. For most.
Some of these carriers are saying, hey, I don't want business in that area. It doesn't matter how big the policy premium could be. So it's really like turning into something really unique. And I think maybe let's just dive into that, right? Like
Yeah.
the hard market, like this is like, so you've been in the industry 24 plus years. Have you seen a market like this? And you have, okay, wow, that's
Wow.
even scarier. I thought you were going to say yes. And I'm like, okay, cool. Like what happens after this, right? But
Yeah.
wow.
Yeah. So,
So it's that tough.
terminology soft market versus hard market. I don't know if that's something that people use outside of the insurance industry. So it might make sense for us to take a second there. And I've been somewhat teasingly saying that, it's okay to grieve the loss of the soft market. And it really has been a grieving process for both brokers, and I'm currently now seeing it with clients because it's not what they're used to. They're used to a soft market where rates are low, competition is high. People are trying to compete for their business. There's tons of capacity. So no matter how big the risk is, there's no problem in getting it insured. And that's not what's happening today, right? That soft market is gone. And so there's been sort of the 7 steps of grieving that people have gone through, like denial, anger. And at the end, you can finally process everything and you can sort of say, okay, this is where we're at. We're at a hard market. Now, what do we do about it? Right. And so, I've seen the brokers go through it. And now I'm starting to see clients go through it. And the sooner we can obviously get people through a grieving process, that's resilience. And so, and this is sort of where we're at when it comes to this market.
Man,
Competition's low, rates are high, there's no capacity. Some people are not able to find coverage, and certainly not coverage at an affordable rate like they used to have.
I like your idea of letting people know that it's okay to grieve. It's healthier to go through the grieving process, and the outcome is resilience.
Yeah.
I never even thought about it that way, but I think it's time for people to come to grips with that.
Yeah.
And the sooner we can come to grips with that, the better that we are able to educate our clients, or friends or family,
right,
as to, hey, we really need to be looking at what insurance brings to the table when you're shopping for a home. Like,
yeah,
now that's got to be part of the equation. Like,
right,
gone are those days of the homeowner making a call like I used to when I bought houses. Hey, Mr. Agent, I'm in escrow. Hook me up with insurance. It was super easy.
right.
And now there's sticker shock on, hey, I don't have much time, but here you go. The premium is X. And now you have to take that into the equation of the purchase price of real estate. That's a big deal. In addition to, like you'd said, the premiums keep going up. And Heather, look, we just finished up a job for an elderly client in Pasadena, California. And she got a letter saying you have to take care of, do ember resistant vents.
Sure.
So she did it. And as she's doing it, right, we're literally there doing the job. She comes out with another letter from the carrier saying, by the way, another thing we want you to do after you do that, we need you to enclose all of your eaves.
Right.
And so she starts crying because she took her savings just to take care of these vents. And now she's in fear that she's not going to be able to afford the, closing up the vents. And what is she going to do? So, man, the environment is really changing for homeowners, and it's really tough. Are you seeing, or are you hearing some of these stories coming your way?
Yeah, absolutely. I mean, we're sort of in it every day, right? So we're putting together programs in the E&S market and, the specialty market, excess and surplus lines, where people didn't need us before, right? They could just go to their admitted, everybody knows them sort of market, and they got a standard policy with the premiums. And now we're sitting here trying to find capacity for homeowners, and we're having to negotiate quite a bit with carriers, not just on premiums, but also on terms and conditions, because on our side of the house, if there's been losses, they might exclude certain coverages. In some states, they might exclude wildfire. The risk is just not one that the insurance company is willing to take on, because the wildfire risk is that high. They're sort of saying it's not if, it's when, right? So, there are states where we're having to present programs that don't have, that coverage. And that's never been like that before. And people are then having to choose, is it worth the coverage, right? Do they want to pay that kind of premium? And most of our clients, we're lucky, have the funds to do it. Yes. But I do feel like there's that segment where they did not plan for this. And so they're having to make decisions on, if I can't afford the insurance, what do I do? And of course, it depends if they have a mortgage or they don't have a mortgage. There's forced place insurance by mortgage companies, but that just protects the mortgage. That doesn't rebuild the house. So that's, a very expensive policy, and you as a homeowner get really nothing out of it. So it's really tough, and it's, I don't know if you want me to talk about where I see it going, but I see it going.
So I want to, like, you dropped a lot of gold right now, and I want to go back a little bit, to clarify some things. But I do want to know where you think it's going.
Yeah.
So let me unpack this a little bit, because we have some listeners that may not understand what excess and surplus means, in the insurance world, or a wholesaler, or specialty insurance, or admitted market and not admitted market.
Sure.
Can you just unpack that for us laymen, people that really like, what does all this mean? Like, we're so used to calling the agent, he or she takes care of it.
Right.
And we're blessed with a policy. Cool. But there's a lot that goes on in the background, especially now.
Yes.
With trying to place policies for people. Can you unpack that a little?
Yeah, absolutely. So I'll start with admitted, because I think it's what people can relate to and what people sort of know. So an admitted market is an insurance carrier. In the US, it's typically domestic insurance carrier, meaning that they're, based in New York or based in Florida, and they decide, where they're going to write, what they're going to write, what kind of terms and conditions, and they propose that to departments of insurance. So each state has a department of insurance. They approve or say, you know what, no, from a consumer perspective, this doesn't make sense. We're not going to approve this, right? And that's how, the insurance companies sort of on the admitted side work. They have to get everything approved by the Department of Insurance. And, it's really to protect consumers. It's great. But there are issues with it, and in a hard market, in a market where insurance hasn't been profitable when it comes to property, it's really created some issues for some carriers to be financially stable or solvent. And we've seen where some carriers, either they have to choose to stop writing business, maybe in a certain line, a certain state, maybe altogether. And so
let me unpack this for a second.
Yeah.
So people can get a better idea. Is this the reason why State Farm decides to stop writing in California? Is this the reason why AIG decides they're not going to write in California? Is this the reason why Farmers Insurance says, hey, we're not going to write new policies? Is it because of the restrictions that the Department of Insurance has on these admitted carriers that doesn't allow them to raise their prices or be more flexible?
Yeah, I mean, it's part of it. It might not be all of it for certain carriers.
Right.
It's certainly a huge part of it, because as everyone knows, insurance companies are there. We're not for profit. We're for-profit companies in the insurance industry. So they have to be able to make a profit. And if you're looking at a state and a line of business that isn't profitable, you might be able to sort of plan for a year or two of unprofitability, especially if there's been catastrophes. Usually insurance companies sort of plan for that. Insurance is a long game, right? So it doesn't mean they, weren't profitable last month and now they're going to exit the state. It's been a problem for a long time. The restrictions on the admitted side, it does make it difficult in a market like this, where we've had a lot of, severe weather, where prices have gone up, where we still have supply chain issues that make, everything more expensive. It makes it very difficult for these companies to be profitable because, they might be charging a rate that was okay 2 years ago, but they're trying to analyze that and say, hey, what kind of rate do we need to charge now? It takes a while to get to that number, to put together that proposal, to then give it to the Department of Insurance, who then has to go through it with a fine-tooth comb and determine whether they agree with it or not. And there may be a lot of back and forth between the carrier and the department to make sure that they're understanding each other, right? And then, it either gets approved or it doesn't get approved. And, it's been known where, maybe it's been a few years where the carrier hasn't. So then they're really charging old rates and it doesn't relate with the new cost and what's going on.
That makes sense. So is this why the non-admitted market is booming?
Right. So the Department of Insurance, we don't have to file our rates. It's not the wild, wild west. We certainly still have some, we have to make sure that we're profitable. We have to make sure that we're financially stable. There's safeguards within that, to make sure that it happens, but we don't have to, on every policy, offer the exact same kind of coverage. Every risk is not the same. So if we say, hey, we can write this risk, but not with this coverage, and we can write this risk, but at this price, then we have the freedom of rate and form to do so. And so,
rate and form, is that a real term?
Yeah, it is. It is. Yes. Yeah. So you have you can be rate adequate and you can have the right policy form that you believe like, hey, this makes perfect sense, where on the other side, it's like, no, you can't just exclude something, even though they've had 4 losses and, well, hey, we're not comfortable that it shows a trend. They're going to have another loss. So.
Wow. So, the non-admitted market has a lot more flexibility.
Yes.
And really, as a wholesaler, the brokers are going to you to say, Heather, Burns and Wilcox, help me out here.
Yes.
What can you do? Right.
Yes.
And so then you go and you put the scientist hat on and do whatever you do to figure out what your tolerance is for risk. And then you come up with a plan, like you had suggested earlier. In some cases, there is no wildfire coverage.
Right.
And so if there is, okay, now I've heard of this too. I've heard of if the exception, options, there's so many options here that I'm thinking about. One is no wildfire coverage. Number 2, a reduced limit on wildfire coverage. Number 3 are there limitations on smoke also?
Yeah, there can be. And again, all this can be driven by the state too. So for instance, California defines fire as fire. So there's not really a difference between wildfire and house fire. So obviously an insurance company, the basic form includes fire. So you can't exclude wildfire because you're excluding fire.
Right.
And so, for that reason, there's not as much flexibility for even on the E&S side, for us to exclude fire. But there might be a way for a large separate deductible, which might help protect. The problem is deductibles don't always come into play with wildfire, right? Sometimes if it's because of smoke, yes, the deductible will help the insurance carrier, but a lot of times with wildfire, you're seeing total losses, or at least that's what we've seen in the past with, these properties that don't have risk management. So the deductible doesn't completely help the insurance company remain profitable.
Got it. Okay. Cool. Thank you for that. Thank you for explaining that. Now, really quick, as a wholesaler, Burns and Wilcox, the brokers, agents are coming to you to provide this flexible policy, and then they go back, they have the homeowner say yes or no,
Right.
and that's how you do your business. Now, with regards to risk management, you just touched on that, and I want to dive in.
Sure.
There's a few other things I don't want to forget either. What is your thought on risk management with regards to, and I'm going to get specific to California just for a second, and then we can go broader. But in California, the Department of Insurance is saying that they will provide, or I'm going to use the word force, that they will force the insurance carriers to provide some sort of a discount or some sort of a break if you mitigate risk in these 3 ways.
Yeah.
Have you seen any of that work? Okay, that means no.
Yeah. Well, one, it's too soon, right? It's too soon.
Okay.
It's too soon to determine whether something like that would work. I mean, but the issue is too that, I think in that sense, risk management isn't necessarily being used in the right way, right? It's being used to reduce the premium because they're saying, hey, this makes you a better risk. But the mitigation that has been required, I'm going to use required versus forced.
Okay, thank you.
Yep. That mitigation isn't enough to make insurance carriers profitable. So to me, to give a discount, if it's not going to ensure profitability, I mean, I do think, for those risks that are better risks, you deserve to be eligible for more coverage. You deserve to have a better price. But at the same time, I don't know that that's the right way to use risk management. I think the right way to educate on risk management is to teach people you want to manage your risk because you don't want to rely on insurance, because you want to avoid having the claim. You want to partner with your insurance company to not have a claim and to really, not have to go through what people go through when they do have a claim.
So true. We've talked about this a little bit. Having been in the disaster restoration industry for 26 plus years, I've seen the other side of what wildfire damage does, not only to the property, but to the families.
Yes.
Man, and it really challenges and disrupts the family in such a way. I use this analogy earlier when we were talking, when you go to couples counseling, right? You at a certain time in your life, for me, like, hey, the woman could break up, this other woman could break up the marriage, or these outside relationships could break up the marriage. However, so can a wildfire, man.
Yeah.
Like the emotional stress that comes with this type of a catastrophic event really like pulls on the relationship, and we don't realize that. So to your point, I think risk management feels like being able to manage your health in relationship, manage your wealth in protecting your assets.
Yep.
And protecting the family.
Right.
It's all of this together. But look, you went through a fire at a young age. Can you talk a little bit about that and what?
At a very young age, our family had a house fire, and it was a kitchen fire. We were displaced from our home from almost a year. I still get emotional about it. I was, going into the 6th grade. And, my mother got really badly injured. The stress level that our family unit went through, I have no doubt that, people just don't understand what it's like to go through that experience until you have done it. You talk about empathy and, everybody goes, oh gosh, you feel so bad. But even when you see these events, these really large events on the news, they're there for a minute in front of your face. You have your feelings about it. Your heart goes out to these folks, but that's all you really see, right? And it's years that it takes people. And even me, still have post-traumatic stress, still get emotional about it. This year for Christmas, my family all got fire blankets. I never knew about a fire blanket before. I bought them all fire blankets. So, I've got older nephews, they're cooking now. I'm like, oh my God, do they, I thought about fire extinguishers, but I was like, oh, I learned about fire blankets. I need to get them a fire blanket, right? And this comes from when I was in 6th grade and having this house fire and what we went through in order to recover. I mean, resilience is not an easy thing to accomplish when you go through a traumatic event. And for many, it'll tear people apart. It'll tear, it completely stops you in your tracks and turns you upside down, right? So, everything's going great one day, and the next day, nothing that you were doing matters, right? Because it's all different.
You're in a different home, different school, different stresses. Oh man, what's really interesting is that I interviewed a gal from the Lahaina fire, a survivor.
Yeah.
And she was so brave in her interview. But one of the things she said to me, she says, OP, people will forget about us in a few months.
Oh, yeah.
And something else is going to take the headlines. And I just say to you, please let people know that we are still years later going to need a lot of help emotionally and financially and in every way. And I thought, wow, that's so very true, right?
Yeah.
It's like the shiny object syndrome, whatever else is on the news, that's what we're looking at now. And
right.
That's past, but the people are still living through it.
Yep.
Now, Frank Freevault, who is he works at Cal Poly, the Wildland Urban Interface strategies on how to make things better for the WUI. He said to me that, oh no, I'm sorry, it wasn't him. Who was it, Vincent? Vincent, it was the fire captain from Austin, Justice Jones. Is that his name? So just fire captain.
Yep.
He comes over to Malibu to do a presentation for all these homeowners where the Malibu fires just took place years ago.
Yep.
He came this year to have a conversation, and what really took over the meeting was how to deal with PTSD.
Yeah.
And the people 2 years later are saying to him, how do I deal with this problem that I have, that anytime I smell smoke, I go into panic. Anytime I see flames, I go into a frenzy. And like, these are the emotional challenges that not enough people talk about.
No.
That takes place.
Yeah. The risk management, like, again, let's not use it for discounts or eligibility. Let's use it to protect us as families. I think people would protect their children from going through something, at all cost. And yet then when they see what it would take to, maybe prevent their family from being displaced, they think, oh, it'll never happen. But I bet anybody who's had it happen wishes they could have done that risk management and protected their family and not gone through it. And when you really look at the cost of it, it's nothing compared to what it's going to cost you, between deductibles, financial loss, time away from work, stresses, what therapy for family members, and,
yes.
Hoping that your family gets through this together. And so, the cost is more than financial. And so, risk management needs to be looked at as, hey, we're doing this to protect us, right?
Yes. So good. Now, Heather, what are a few things that stick out to you that are required for risk management, that are really kind of the big boulders of like, hey, we have to do these things?
Yeah. So to me, we go all the way back, and I hope you don't mind me going all the way back to, how do insurance companies, make money? And they make money in a couple different ways, right? They make it by underwriting profit or by investment. And, if we look at like important risk management just from like a financial perspective versus the emotional perspective we were just talking about, there are things that need to be done to help when it comes to catastrophe. And then there are things that need to be done to help with everyday losses, right? We can't forget that, insurance companies don't just lose money when there's catastrophe. They lose money every time there's a loss. And there's large losses that happen every day without there being weather catastrophes, right?
Got it.
And so, the largest cause of loss other than, the weather would be water. And so like these water shutoff devices, I just want them to be required at time of build. I want, when somebody, it should be like a smoke detector, right? Like you're required to have smoke detectors. They have to be working. We should be required as homeowners, as, landlords, to have these water shutoff devices. And again, by having that, the financial aspect is, you're making the insurance company more profitable. You're keeping your rates down. Maybe you're getting a discount. But the emotional is, hey, you can have a large water loss that also displaces your family and makes you go through reconstruction, which is stressful. And so, I think that should be a requirement. I think, what we're doing from a wildfire perspective, it best what needs to be done, but these ember resistant vents, the closed eaves, there should be no such thing in my mind as a wood shake roof.
Yes.
Like,
agreed.
Absolutely it should be illegal.
Yeah, it should be
illegal. I mean, it should be illegal.
Yeah.
You're putting people in a wildfire zone. Oh, because it looks pretty. I want to have a wood shake roof. And you're increasing, the ability for firefighters to save lives, for, this family to be safe. It shouldn't be allowed, right? We know it's not safe. It's not the safest thing. So especially when I see new builds and they're putting a wood shake roof on, I mean, I can't stop shaking my head, right? My head's sore from shaking it, going,
that's
what?
Crazy.
And then why do you expect us to insure you?
Right. Right. They want it to blend in with the landscape, right? So that's crazy.
Yeah.
Okay. So water shutoff valves, super smart.
Yeah.
And we get a lot more calls now. It's very interesting with our company, Allied Disaster Defense. We have the logo has water, fire, and then it has a sever in the middle, which stands for earthquake.
Yep.
And so we're installing earthquake valves, water shutoff valves, but the wildfire piece is really the one that people have been interested in. What's so unique right now, Heather, is that the calls that we're getting right now are like, hey, can you please install water shutoff valves for my clients? And it's going back to your comment of the entirety of risk management. It's not just wildfire, it's managing the risk of the property, of what else can go wrong. Very, very true. I love that. And so you're saying by doing some of these things, we're making the insurance companies more profitable, which we should all be for-profit businesses, and realize that if the carriers are healthier, then if and when I do need to file a claim, they're going to be solvent enough to make me whole.
Yeah.
Right.
Yeah.
And so
help us help you.
Absolutely. Jerry Maguire. Let's go, man. Let's
go. Right.
Yes. Now, okay.
And I think we've been doing a lot of education around risk management, but it can fall on deaf ears during a soft market. During a hard market, we have people's attention. Yeah. And so I think we have to make sure that we do utilize that, really to make these homes and these families more resilient, because they're sort of willing to do it right now, or they're being required to do it, in order to get coverage. So, we need to do it. We've been educating on it. Again, people don't get excited about insurance until it's not available or it's really expensive. Then they get excited in a negative way, right? Yes. So, but we need to get people really excited about risk management. And, we've been teaching about it, but at what point does education become action?
That's a really good point. And I think for everyone, it's different. Obviously, when you're like the message you're sending out now, I think is going to land on some people's ears, and they're going to say, you know what, enough is enough. I've been hearing about this, but I really like the way Heather put it in being able to protect the family. I don't want my children to suffer. I don't want to suffer through a relationship turmoil unnecessarily,
Right.
family being displaced. And when you think about it, like, when I had teenage daughters, I'm thinking about like, if we a major, catastrophe where we have to be out of the house, and I've got like, in the meantime, a few different hotel rooms
Right.
to have the family. Then you got to find a different location of a house. What I think about is the influence of the other children on my kids in a very vulnerable time, because I'm super busy trying to figure out how am I going to build this house back. And my attention is not here with the kids. My wife's attention would probably be frantic also.
Yeah.
And the kids are like wide open, man, wide open to like, someone who has a lending ear. And I have 3 daughters, right? So I'm like, I'm in protection mode. I'm already thinking about like, this is very risky.
Yeah.
Very risky.
Yeah. You can't be there fully for your family in the way that you want to when you've got this huge project and this trauma that you're trying to get through yourself, and you're trying to get your family through it quickly, because again, if you can get through trauma quickly, you're likely to recover, you're likely to be more resilient, but it doesn't mean that it doesn't have an effect, and it doesn't sort of help direct where people end up. And so I always say, like, I have a different passion about risk management going through what I've gone through.
Yes.
And, I just feel like I wish there were more ways for us to help, not just educate, but get people to then have action, which is one of the reasons I love the company that you have, because I'm a homeowner as well. I don't have all the time in the world. So time, with time and money, you can do anything.
Yeah.
And I don't have all the time in the world. I've got a little girl and I want her to have my attention. So if I can call someone and they can tell me what needs to be done, and oh, by the way, they can do it, let's do
Yes.
that. Right.
Awesome. Thank you. That's
Yeah.
a great compliment. And it's really interesting because you're right. All the things that we do are really do it yourself.
Yeah.
A customer can do it themselves, or we can do it for you. And some people are like, hey, I'm not a DIY person. Can you just handle it, please? And that's where we come in and say, no problem. We'd love to. But I think people need to realize there are just some basic fundamental things that they can do to increase the management of minimize their risk, and protect the family. Man, why do I feel like this is kind of more of a relationship show right
Is this
now?
a therapy session versus an insurance session? Sorry.
Yeah, I love it. No, I think
But,
that's awesome.
insurance is personal. I mean, I deal in personal insurance,
Yes.
and it is personal. A lot of times it's the person's largest asset. It's a meaningful, it's where you've raised your kids. I mean, so I had won 1 trophy in all of my years of competition. I wasn't big in sports, but I had 1 trophy. It was back in the days before you got a trophy just for showing up, right?
Right.
You had to do something good. I had 1 trophy and the thing melted. Like, that was traumatic for me. I'm like,
Darn
I
it,
still think
man.
about that trophy, like, and so, you think they're just things, but memories are there. And it's one of these things where if you can prevent it, you're going to prevent your family from going through pain. And it's so important. So yeah, I mean, I do think, personal lines is personal. And so that maybe that's why it feels more like
I
a
love
therapy
it.
session
I
than
love it.
an insurance talk. But, I think that's the thing is, insurance during a soft market, a lot of times it's focused on cost and discounts, and you really don't get to the true meat of what insurance is for, which is, to make you whole when you need it. But there's all these ways to make sure you don't need it. And let's make sure that we do those. And that's where I feel like our insurance brokers right now can be the most help to their clients, is making sure that they get the best coverage that's available at the price that's out there. And then at the same time, making sure they just don't need it and they're more resilient in the future. They know what to do to avoid loss and to keep their family unit safe, protected, and moving forward.
Boom. Look, I got to say, to all the brokers out there, everyone listening, I think forwarding this to family and friends is going to be powerful, and it's our job to persuade people to do anything. It's going to land on them or it's not.
Right.
And that's it. Right. So, but getting the word out and letting this grab someone in their heart to say, I really need to do something about it. Like, let's share it from that standpoint. And brokers can share to say, hey, Mr. and Mrs. Smith, I know you're struggling, man, with these rates that I'm giving you, but give this a listen.
Yeah.
Okay? And see if it really, changes your mind a little bit. But this is the reality of where the market is right now. And 2024 might be different. Right.
Yeah.
And so, but I think sharing it is going to be awesome. So I encourage all our listeners to do that, either share it on YouTube or share it on the podcast. Now, Heather, let's talk about 2024.
Yeah.
Right. I know we're just now in it, the first week, but because I know that you know everything. Okay. So
most women do, right?
Exactly. Yes, I love it. So good. What do you think is going to be happening here?
Yeah.
With this
Yeah.
year?
So, the insurance market's a financial market. And it was September of 2022 when AM Best, who, keeps an eye on the stability of the different insurance companies and insurance marketplaces, it was September of 2022 when they said that US personal lines was going to be changed from stable to negative. And, they just re-released on December 4th that they're standing firm on that negative outlook. And so, when people say, is it going to get better? Not yet. And there's a lot of work that needs to be done by all parties for it to get better, or insurance will change, and that's what we're seeing right now, is that we're seeing that insurance has changed. But, we want the market. I don't know that it'll ever get back to as soft as it was, but we want the market to rebound, right? If the stock market did this sort of negative outlook and sort of, everyone would be aware of it. But in insurance, you're really only dealing with it maybe once or twice a year. And so you're sort of thinking it's just a blip in time, it'll get better, or you expect it to sort of rebound quickly. But that's not really how this market is going. And it's somewhat unique because of that. And, additionally, I just think it's one of these things where if you want to have it in a better place, you've got to figure out what are the triggers that are going to make that happen, and they're not quick. So we've got work to do. Everybody has work to do. And I think because of that, it means that we probably can't have one conversation during a renewal about risk management, for instance. During the renewal right now, people are getting shocked by their price. They're getting upset. Maybe they're selecting coverages that are optional to no longer have insurance on, so they can sort of swallow the amount that it's costing them. I don't know that that's the right time to then have the risk management conversation that we were just having, right? I think having follow-up conversations, like, this right now is, insurance has always been sort of a once-a-year deal. You deal with it, you close the folder, you put it away. Next year, you'll deal with it. You don't watch the market anymore, right? I think now we need to, be in touch with our clients even more and make sure that they're educated and they're implementing and turning these, risk management strategies to protect themselves and make them more resilient and more attractive to insurance companies, that it's getting done. So multiple conversations need to keep happening. Like, so when I think about what's the outlook, the outlook's not good, right? Like the professionals, the experts, they're telling you that. But then again, what can we do? There's a lot that we can do.
I think for sure, anyone who's selling insurance, instead of talking to their clients once a year, should at least include one more conversation in between, because the risk management piece can't get done in a week, and these are the calls that we get.
Yeah.
Right. hey, my client, got a notice 2 months ago, and we got 7 days before that date, and I need you to step up. And it's like, we're running around trying to place orders and get there and move manpower and get them across the finish line, but it's not always possible. And so allowing the agent or broker to have the conversation in advance. Hey, Mr. Smith, look, here's the deal. If we really want to position ourselves to be a better looking risk next year in 6 months, here's some things we got to do. And you can do them, or you can find people to do them, or here's a company or two that can go out there and give you a price to get this stuff done. But at least giving them the option to prepare is going to position the broker agent in a much better light to say, hey, you know what? You're thinking about my family. You're not just looking out. The broker's not gonna make any money off of that.
No.
Right. So they're just like, look, I'm just trying to look out for you to make sure we're best positioned. So I really, really do love that. From the standpoint of the insurance companies and AM Best saying, hey, look, it's going to be another negative year as far as their outlook. When we think about how the insurance companies make money, and I'll just tap into this really quick because I remember in your class, I had kind of a breakthrough of like, whoa, okay, I had no idea. And I want the listeners to kind of hear your example. You had said that they make money in two ways, underwriting and then the investments they make.
Yep.
Can you talk a little bit about both?
Yeah. So, obviously underwriting profit should be sort of the key way in which an insurance company makes money, right? They should be looking at the risk, determining what to charge for it, making sure they are taking into account their expenses, what payouts would be, and they should be able to make money just by underwriting profit. That would be ideal. But a lot of times investments help them, right? So they will take some of that money that they're gathering, those premiums, and make, investments so that they can get their money working for them. And everybody would want that, right? If your insurance company can get the money working for them, then maybe they don't need to charge you as much, right? Because they have an overall profit that they have to get. And it's between those two sides, underwriting and or investments.
Investments.
Right.
And so on the underwriting, I think the way you explained it was, if they're being charged $1 for this reinsurance,
right?
Okay, they're charging us $1.10, and so they're making 10 cents on the spread. That's kind of the underwriting profit you're talking about. Is that right?
Right. Well, so reinsurance, and that's sort of a new term that you're throwing in here.
Okay. Yes, I know.
Concept.
Sorry about that. That's the only one.
That's okay. But reinsurance is where, insurance companies also sort of transfer risk and say, hey, we're going to reinsure part of this to make sure that we make money, to make sure that we can remain stable, because we don't know everything that's going to happen with the weather,
Right.
the severity, the frequency, and so forth. So, they purchase reinsurance, and that's one of the many expenses. But in the past, it's always been a pretty small expense, sort of like, an individual's, their insurance has probably not been like the thing they think most of.
Right.
It's been a pretty, minor expense line for them. Now it's not, right? Because and there's tons of other expenses, right? There's technology behind insurance. There's, the people that have to do the work. There's the claims process. There's lots of other expenses that fall into their expense bucket. But right now, the one that's so vastly different than what it's been in the past is the reinsurance, because the reinsurers have not been making money either because of the severity and the frequency of claims.
Boom. Man, and there's other places to invest our money where they can get guaranteed return versus this risky.
Right.
Now insurance is risky, right? It hasn't always been that way.
Right.
Okay. All right. So what else? Heather, you've given me a lot here, and I think the listeners love what they've heard. At least I do. So thank you. Is there anything that you would like to leave the listeners with to ponder and think about, or a message that you'd like to provide for all of us?
Yeah, I think right now this is happening to so many individuals that time has become, one of our assets that we don't have enough of. We just don't have enough time. So making sure people are able to use their time wisely, able to help people get through these conversations and implement risk management. It's so important that we're not wasting people's time, right? And so, having strategies with your insureds, having the conversations with your insureds so that they're prepared. Some insureds are having brokers run around and get, all these different quotes. They're not vastly different. They're not going to be different if you can even get them. Like, let's not waste that time. Let's spend that time doing risk management, and instead of me, I know the market. I'm an expert in the market. I've done this every single day, Mr. Insured, for the last 360 days or however long you want to say that the hard market's been affecting your clients. And so that being said, it's not going to be vastly different. Let's talk about the risk management strategy. Like, somehow we've got to change the conversation to risk management versus, looking for that diamond in the rough that just right now it doesn't exist. That's soft market behavior.
And it's funny because I think about, when you're saying this, I'm thinking about, back in 2008 when everyone was a mortgage broker, right, or a realtor. Everything was very quick and easy, transactional, and everyone's making money. And then as soon as the market gets really difficult, these people leave. Boom, they're gone because they were just here with a quick buck. But the reality is, it's a relational business. And I feel like that's kind of the message you're sending is right now is like, hey, agents and brokers, you've been so accustomed to just being the salesperson and flipping one house to the next, when the reality is it's time now for us to get really personal and get stickier with our clients, because that's going to help the client the most. Instead of, going to you and everyone else like, hey, who else can give you the best price? And it's really not that. It's like, let's slow things down, educate your customer,
right?
Get closer to your customer so they like you and trust you more and take your advice.
Yeah. We've got to be talking to the customer more. We have to be updated on what their assets are, what they have, what they want to insure. We have to educate them on the market before they're getting, non-renewals and or premium increases. Like, that education has to come ahead of this, ahead of them getting that piece of paper in the mail. And then we've got to get them through these renewals and getting them the best coverage they have. And then also get them really acting upon risk management strategies.
I think about this, Heather, and I think that maybe some brokers might run into, when you're dealing with high net worth clients, like, they're limited on time.
Right.
Like, don't bother me. Just give me my thing and move on, because I have time to deal with you. But the reality is when you say, hey, listen to the, what new assets do they have? What things do they want to accomplish? Like, these are conversations that need to take place. But I think the most intelligent and successful brokers and agents dive into the relationship to understand all of these things that you are asking about. And these people are going to win.
Right.
The ones that are just looking to just, sell the next customer, they're going to suffer, and they're going to cause you the most pain, right?
Yeah.
To like search and search and search. And instead of educating and connecting with the homeowner and really serving them, they're going to give the homeowner a product that may injure them later.
Right. Well, it certainly won't make them better, right? It's a moment in time thing. It may or may not be available the next renewal. It may be, it's probably going to be more expensive. We have to think about how do we make our clients better? How do we make them safer? How do we make them more resilient? And when you explain to the customer that's what you're there for, you need to give me a little bit of your time so that we can make sure that
Yes.
we implement these strategies. I'm here to help you. And if the client doesn't have time, can you find the resources to make it go smooth enough and to still get it done? Or is it the right client for you?
Wow. Boom. So, another breakthrough there. Absolutely. Because not every client, not every, insured should be your client,
Right.
or potential insured.
They may
So,
not value what you're providing, and the value is great. Like we've talked about the value, it's huge,
Yeah.
right? And it's long-term value. So, that being said, we've got to make sure that the clients are appreciating and getting that you want to provide them with safety and long-term value. And if not, it's okay to walk away from that client because they're going to walk away from you anyway. It's just the next
Whoa.
renewal, whatever it may be.
Yes. So true. Okay, my friends, a lot of gold here, a lot of great lessons. And Heather, we got to get you on stage somewhere, man, because I'm serious. You've got some really good things here that I think more people need to hear. So thank you again for coming on the show, and appreciate all of your knowledge and heartfelt experiences that you shared.
Yeah.
And your ability to really contribute in a way that touches people in a way that I don't know that we've discussed on the show before. So thank you so very much. I really do appreciate it.
Yeah, thank you. Thanks for having me on.
Take care, Heather. We'll talk to you soon.
Bye.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.